Italy this week sold bonds maturing in 50 years' time, equivalent to a third of the time the country has existed as a unified nation state. That investors are willing to accept a return of just 2.8% to lend to Italy for 50 years, which is a yield likely to lead to a loss if the bonds are held to maturity, shows the desperation for anything right now that offers yield. It also provides another example of the gap between what the market is willing to pay for government debt compared to corporate equity. Equity is, of course, riskier than debt, and investors have to be compensated to hold it. At the same time, the coupon payments on debt are fixed and will not grow. When you buy an Italian 50-year bond today, you are locking in your returns for the next half century. And if you view it through this lens, the seemingly pricey equity of certain European companies still appears quite cheap in comparison. Nestle, the world's largest food and beverage company, has been in existence since 1866, which is 5 years before Italy unified, and has reported only one annual loss during its history, remaining in business throughout 2 world wars and the Great Depression. The Swiss group, which holds only a small amount of debt, can be bought at a dividend yield of 2.95%. This payout has grown at a compounded annual rate of 9% during the last decade. Inditex, the group behind the Spanish fashion chain Zara, holds a net cash position and offers a dividend yield of 1.4%, which has also grown at double digits on a compounded basis over the same period. Both companies optically do not appear cheap compared with their recent history. It is also possible that over the longer term, consumers across the world might stop buying chocolate or Zara clothes might fall out of fashion. But in a world where investors are willing to accept such low returns on long-dated government debt, it is also a world where markets are pricing in minimal economic growth for decades to come. If the bond markets are correct, then those companies that have displayed an ability to consistently grow profits over long periods of time still appear significantly mispriced.